So let's see what we have on USDJPY. Yeah, so as you can see, we've been having a fall to the downside, but overall you can see that USDJPY has been bullish, higher low, higher high, higher low, higher high, higher low, failure swing. That is, it failed to take out this high. Instead, this high took out this low. Can you see? It took it out by week. But this failed to take out this high, that is failed to form an higher high. So we can anticipate that price is a little bit bearish. However, because of this rejection here, this sharp rejection, this pin bar, we can dance around into this fair value gap, this tiny fair value gap here. Am I having this? Okay, let's see what we have on M. Okay, sorry. Let's go back. So we can dance around to this place, that is this fair value gap here. Something here, this fair value gap here. This fair value gap here and here, that is this fair value gap. Can you see it? This from this high to this low. And we can also anticipate that price gets to this point here, this under fair value gap. So we have two fair value gaps to be filled on our upside. Two fair value gap. We're expecting price to come into. Remember, this is looking very bearish. However, saying that this are taking out this low, this zone here can serve as a strong support, because this liquidity, this low here was taken out, so it can serve as a strong support. But I won't be anticipating a huge move to this all of this zone yet until I see a clean breaking structure on my daily time frame. So I haven't seen this. Let's go to our daily time frame. Now, daily time frame, I like what I'm seeing here. Let's take this off. I like what I'm seeing here. We can see that price took out this trend line phantom. It is clearer on our hourly time frame. This is the weekly fair value gap that I'm expecting price to fill up, and ultimately this particular fair value gap. If I would prefer price to come to this fair value gap, this is another block here standing above a liquidity. So I will just take this out, and my chart will not be clumsy. Take this out too. I'll just draw this out, that is this pin bar or doji candle or whatever I want to call it, hammerhead, whatever it is. So I will just expect price to get here. Take out this eye. This eye for me should serve the liquidity point for price to get to, yeah, alright. Okay guys, so as I was saying, I haven't seen what we have on our daily time frame. Remember, weekly, daily, then straight to your H4. At times, what I do is weekly, then straight to my H4. What am I looking for my H4? I'm looking for a clean breaking structure to the upside, and I'm using my H4 as my reference point, then M15 as my entry. Same thing every time. So right now we can see that there's a fair value gap. Price is presently in the fair value gap on our daily time frame, and the fair value gap is attached to another block, or you can use it interchangeably, that is another block attached to a fair value gap. Then move to your H4, that is your 4-hour time frame. This is very sweet, guys, but remember, as sweet as it is, market is not your father's land. So you still engage risk management and trade management to be on the safer side. So we can see that presently price is at another block below or beneath liquidity. Remember guys, what I said in my previous videos, you can check them up, that when you say another block below or beneath liquidity, you can take the risk, right? Yeah, it's a solid one. In as much as price is uncertain, but you can take the move. So move to your 15 minutes straight up. Can you see how we are doing this analysis under 5 minutes? That's how it ought to be. So presently, if you are the impatient one, can you see there's a sweep on the downside and sweep to the upper side? Yeah, so this, we had a very clean entry during Asian session at this point, very clean entry here. However, these are present. Can you see this other block 915 is quite huge, right? It's quite huge. So if I were you, you can take can set a limit order at 50% of this order block, 50% of this order block. That would be somewhere around here. Or you can split your risks into two. That is, if you are taking 0.5 risks per trade, you can take this trade presently at current market price using half of your risks, then set another buy limit at the 50% of this huge order block. Remember, your stop loss should be somewhere that you know that if price gets there, it's because price is changing its direction. That is, you can use this low, to be on a very safer side. So guys, let's see what this plays out today. Remember, now weekly is still looking a little bit bearish, but we are considering a bullish move today because there's a fair value gap to be filled up in our weekly time frame. In fact, we have two fair value gap to be filled up, and one of them has liquidity below it. And remember, price is booked on liquidity. And also our last weekly candle, which was last week, ended a bullish form. That is, we had an hammerhead. So that's a very clean sign that price wants to at least either retrace to the upside or reverse to the upside, and we are presently on a strong support zone. So guys, let's see how this plays out here. 1:5, 1:3, 1:4, whatever it's yours. Just ensure that you are safe, or you pay the trader at this liquidity that I marked here. Pay the trader and enjoy yourself. Bye guys.